Monday morning, folks, and welcome to a brand new episode of Finmet Mondays. In today's episode, we're going to quickly recap what were the main developments from last week, what affected the price action for gold and silver. Subsequently, we will also look into what is the price outlook for the coming week. Let's get right into it. We saw on Wednesday, 15th of May, a massive $37 increase in the price, which was influenced mainly by the core inflation data, which is known as the CPI data, coming in slightly below what was forecasted. So on a month-over-month basis, the inflation rate came in at 0.3% versus 0.4%. On a year-over-year basis as well, the inflation came in at par. And this was a huge vote of confidence for in the Fed's battle against inflation. This also cheered gold bulls quite a bit, and that led to a $37 increase, as you can see. Post that on Friday, we've also seen comments from certain Fed officials which have helped gold reach these levels of 24.30 at the time of Friday close. Talking about the outlook for the coming week, the first resistance that we have here, which was the previous high that was created by spot gold, was around 24.29, 24.31. This is a level we are going to retest once again, and this is the all-time high that gold has ever hit. Post this level, there are no reference points to understand where prices could probably correct from. Hence, they have been derived using these two ascending trend lines. Convergence of the both of them has produced a resistance R2 of 2493. This is where the second resistance is typically going to look like. The stops for spot gold are currently at the 2320 support and the 2267 support, but you are going to see intermediate levels where a price pullback may be possible, and that's where you might see buying action emanate from. The first of that nature is 2354. This is an intermediate pivot level that we have defined. You can also see that the 20-day exponential moving average also coincides with this line. An interesting pattern that we can also observe is the formation of this cup structure in the daily gold charts. And there is a technical trading pattern called cup and handle, where after the formation of a cup from the swing high to the swing low and back to that swing high, you may see a retracement of the metal somewhere around back to this pivot of 2362. But if the metal, after retracing back here, is manages to break above this upper band of this retracement, that is a strong indication that the metal is ready for its next leg of movement, and it can then shoot above 2430, and it can actually go ahead and test 2493. So this is one of the scenarios that could play out. The resistance for silver is somewhere around 31.6 to 32.8. These are the two resistances that have been defined. And on the support side, you have 28.8 and 25.9. The likely scenario with silver is, given this overstretched jump that it made on Friday, you might see a little bit of a correction as markets would wait for prices to retreat before it is able to create another leg back up. So you might see a slight pullback here, and then you might see a leg up back here if there are no changes in how the US economic data is performing. Coming to the US economic data, this week we do not have many key economic data points. We do have speeches from several Fed officials, and we're wanting to hear more about what clues are they willing to offer about interest rate cuts. Is it going to be September, where rate cuts are going to be initiated for the very first time, or are they waiting for more key confirmations before they're able to announce something like that? The only two key data points that I would also focus on is the release of the FOMC minutes. This is the minutes of the policy meeting that took place last month. And lastly, we also have durable goods orders, which is a monthly indicator of how the manufacturing activity in the US is taking place. Finally, as we do every week, we look at the revised probability of a rate cut in September, and that number currently stands at 81.6%. These are very strong odds, and if inflation data, the US labor market, continue to perform in the same way as they have in the month of May, in the subsequent months of June, July, August, this is a much more firmer probability, and you're going to see gold and silver prices react to that. I hope this was an easy to understand and a very high level outlook of what prices look like. For a more detailed outlook, if you would like to understand that better, please don't hesitate to reach out to me on the email address in the description. Thank you so much for listening and goodbye.